not only that this video was a recommendation, but I think it's the way it's titled is giving me like a Halloween kind of vibe, like the truth about day trading. You're like, damn, what the heck? What do I not know about day trading? So yeah, we're about to check it out, but I'm laughing because there's a funny comment that I found so funny. I scrolled, yeah. Let me show you guys. I scrolled. This is the most interesting intro to a video. Someone said, "This is why I recommend night trading." This made me laugh so much. I just had to pop it in there. This is why I recommend night trading. Day trading, do you get it? Yeah, hopefully you get it. And that just wasn't like, yeah, it is what it is. But YouTube is Ronnie MP. Whoop!
It's RonnieMP.com.
Want to join my free gift card giveaway? Subscribe to the channel, like the video, and turn on the notification. Then let me know that you subscribe down below. That's it. Hey yo, what's good YouTube? You know who it is. It's your boy Ronnie MP. Thank you and welcome to a brand new video of It's Ronnie MP, the show where we bring you guys a bunch of videos suggested by you guys, and guess who? You guys only. So if you're brand new to the channel, then be sure to absolutely let me tell you how it is and not how it was. Destroy that like button and then shake it all about. Honestly speaking, smash that like button. It generally means a ton for me, and it helps get more eyeballs onto the channel, just like I'm about to do for this lovely gentleman we've got in front of us right now. Bam, smash it. So I'm practicing what I preach, okay? All right, so but be sure to do that because we're about to check out the truth about day trading. Often not often, but a bunch of times I get some DMs, even on TikTok in fact, about day trading. Like, should I get into it? Well, I don't want to give you any professional advice or whatnot, but I don't know too much about it, so I'm not going to tell you nada, because I'll prefer me keeping my mouth shut rather than telling you something that's going to ruin. We're talking about people's finances here. It doesn't matter if you're young or not, but that is money that you could have potentially used to start up your business. That could have made, I don't know, it could have turned into a multi-million-dollar business, multi-million-pound business, whatever it is. So do you get what I mean? We have to treat it and take it serious. But we're about to check out this video anyways, the truth about trading. You can see the title right there. It seems like it's going to be good. Without further ado, let's go.
Buying and selling the same financial asset on the same day.
Hold on, back to zero.
Day trading.
Okay, day trading of buying. Okay,
the same financial asset on the same day sounds like one of the smartest approaches to investing in stocks.
Yes, it does.
Why bother holding on to an index fund when you can make daily profits?
True.
And to make day trading sound even better, there are lots of people on the internet nice enough to teach you how to trade and make huge, easy profits just like they do.
They're called gurus. He's a guru. Yeah, and you often spot it when you're watching YouTube and then an ad comes up, and it's like literally, ever wondered about trading and what trading is like? Well, I've been trading since the age of 7. And I've traded a bunch and I've made millions and millions of dollars when I used to live in the cottage with my 2-year-old friend. And it basically it's all about how they used to trade when they were so young, and then they've made so much money and now they're full of wisdom and they just want to teach you. All you have to do, and I'm not even kidding, all you have to do to learn what I learned, it's as easy as paying me $25,000. And you pay me $25,000, then you're going to become not only as rich as me, even if you might even become more richer than me. I'm not promising, but you're going to become more richer than me. Just pay me $25,000. But I know not everybody has $25,000 lying around, so I'm going to break it down into 10,000 payments in different installments. So please don't be fooled, don't be tricked. Learn from someone who's who's doing it, just do your research, okay? Please do your research. I don't want you to lose money.
I'm Ben Felixs, portfolio manager at PWL Capital. In this episode of Common Sense Investing, I'm going to tell you what day trading can and can't do for you.
This is the first time coming across Ben, so I've never seen his stuff.
And most important
so shout out to him.
About day trading
Go subscribe to him as well.
What the data say about its effectiveness as a strategy. There are a few data sets that researchers have been able to get their hands on to answer this question.
Okay.
These data sets are unbiased samples of all transactions for thousands of brokerage accounts. The researchers define day traders in the data based on the frequency of their transactions, and then they analyze their performance. A 2000 paper in the Journal of Finance titled "Trading is Hazardous to Your Wealth: The Common Stock Investment Performance of Individual Investors," examined a data set of 66,465 households with accounts at a large US discount broker between 1991 and 1996.
I can't lie, this is actually really good, honestly speaking, because I wasn't expecting this, but we're actually getting a ton of value from this video already. So please, I can't stress enough how much you need to smash that like button, not only for my video, but for really for Ben Felixs, Ben Felixs, for Ben Felix's video, because it seems good already. It's giving us like documents
to test two competing theories of individual trading activity.
back in the days.
One theory is that investors will trade when the marginal benefit of doing so exceeds the marginal cost. The other theory is that investors are overconfident and will trade to their own detriment. Based on their findings, the authors conclude that individual investors are overconfident based on the empirical evidence that the average household earns a return close to the market before costs, but trails the market by about 1.1% annually after costs. In other words, they trade to their own detriment.
Fair enough.
The institutions gain from the same. This speaks to the question that individual investors should always ask themselves before placing a trade.
Which is?
Who is on the other side? Do I know more than whoever I'm selling to or buying from? These data intuitively suggest...
That's a good one, and I honestly think a deeper question to obviously even ask yourself, or to further analyze onto that is, or to even add on to that, I think this is just a genuine question you should be asking yourself, period, with any investment you make, which is, can I afford to lose this money? Honestly, I know it sounds simple, but honestly, because this would prevent a lot of people from making some silly decisions we've all made with money, and you just regret it. But can I actually afford to lose this money, especially if it's a large amount? If it's an amount you've never touched before, and now you're just playing about with it, and you can't even afford to lose it. If it's an amount that you lose, you're becoming homeless, then please, I beg of you, do not make that move. You're going, well, I don't want to say you're going to regret it, because there's that small percentage that you could, it could work out and everything. But majority of the time, if you're not a professional at anything, or not even anything, but within that sector, whatever you're going into, then you're most likely, I'm not going to say definite, but you're most likely going to lose your money. Because, come on, man, it's like I'm telling you right now, go play professional football, and you've never stepped on a foot on the pitch. You've never even watched a football match. How do I expect you to perform? Poor. You're going to lose. You're not going to do well because you're not professional. You're not experienced. You've never been exposed to it. That's what I'm telling you. So let's bear that in mind.
Individuals are less informed than institutions when they place trades. The authors dug deeper into this issue, finding that nearly all of the losses incurred by individuals stemmed from aggressive trades, which they defined as buy limit orders with high prices and sell limit orders with low prices. In other words, when individual investors were willing to buy higher above the market price or sell lower below the market price in order to execute a trade, they were willing to trade with urgency, is when they tended to lose.
Okay, so that scarcity factor increased losses for people. Interesting.
On the other hand, made most of their short-term trading profits from passive trades, where they were not demanding urgency and were instead providing liquidity to the individual investors. As the authors of this study explain, the institutional profits associated with passive trades are realized quickly, as institutions provide liquidity to aggressive but apparently uninformed individual investors. While these data should be discouraging, a 2012 study titled "The Cross-Section of Speculators' Skill: Evidence from Day Trading" examined the distribution of outcomes for day traders. Sure, on average, day traders trail the market after costs, which just makes sense. But do the best day traders consistently make money? Again, using
this is very this is information packed right here. Damn. And I'm obviously, I acknowledge, if you're not into trading, then this might just be like you're not interested. I can clearly imagine. But if you watch this video and if you are a subscriber of this channel, these are some of the things that you need to know, especially if you want to get into day trading and all of this. If you don't, then I guess it is what it is. But we move.
These data, this time between 1992 and 2006, the authors find that less than 1% of the total population of day traders is able to reliably earn positive excess returns after costs.
Wow.
In the average year in their sample, about 450,000 Taiwanese individuals engage in day trading, while only between 1,000 and 4,000 of them, depending on the assumed level of trading costs, that is between 0.22% and 0.9% of the 450,000 earn consistent alpha after costs. It is important to point out that the top 500 day traders, the top 0.1%,
wow,
do consistently earn very large alphas of about 38 basis points.
The top 0.1%. That is a small number. Damn.
Per day. The authors show that this result is partially but not completely explained by chance, meaning that there is evidence of a very small number of skilled traders within their sample. We have now seen that while day trading is harmful in aggregate, mostly due to costs, there is meaningful variation in the cross-section of investors' ability to be successful in day trading. A small, tiny, really, subset of day traders in Taiwan from 1992 through 2006 did exhibit an ability to earn consistent profits. Maybe there is hope for day traders. At least there was hope in Taiwan from 1992 to 2006. The world has changed a lot since then. A more recent study titled Day Trading for a Living examined all individuals who began to day trade between 2013 and 2015 through the end of 2017 in the Brazilian equity futures market, the third largest in terms of trading volume.
I'm excited to find out.
They found that of the 19,646 new day traders in the sample, 5.7% of them day traded only one day, 50.8% between 2 and 50 days, 15.8% between 51 and 100 days, 13.9% between 101 and 200 days, 5.9% between 201 and 300 days, and 7.9% traded for more than 300 days. They found a monotonic decrease in the probability of profit with an increasing number of active trading days. In other words, traders who traded more often were less likely to be profitable.
Wow. You see, the more you trade... Damn. It's kind of counterintuitive. So the more you traded, the more you lost money. Man, damn. It's one of those things like I personally don't do day trading. I'm not telling you to follow me. I'm not saying that it's bad. I personally think it's just too... Ain't nobody got time for that. That's what I personally feel like. I feel like it's just like I've got too many things going on for me to sit behind 1,000 different screens and just pay attention to nah, ain't nobody got time for that. That's just my personal opinion. You can do whatever it is you want.
151 individuals who day traded for at least 300 days. They found that 97% of them lost money.
Oh my days.
1.1% of them earned more than minimum wage. 0.5% of them earned more than a bank teller's salary. And the single best day trader earned $310 per day on average with a lot of daily variance. They also ask whether there is learning among day traders. If there is learning, the bad day traders should self-select out, while only the good ones continue to trade and increasingly improve. They find no evidence of learning, instead observing patterns usually found in gambling activities. I
knew it. I've always said to myself, like, why does this feel so much like gambling? Let's keep that a secret to ourselves. But I've always said to myself, why does this feel like gambling? Literally. I don't know. I told you guys it's my personal opinion, but I've always felt like it feels like I'm a professional gambler. If I were to do it, you know. So that's just my opinion. I keep saying, but because I don't like. Sometimes people can get really like, you know, butthurt. You know, like, oh, like you're trying to say day trading's not bad. Just mate, come on. So that's my personal opinion, but just do your own due diligence. Oh snap! I didn't even play for you guys. Hold on, let me show you guys. Sorry, I just got too hooked into it.
Is that during the 1992 to 2006 sample, retail day traders did not have to compete for profits with institutional high-frequency trading algorithms, which are increasingly prevalent in today's market. This suggestion brings up an important concept in trading: the paradox of skill. This term was coined by Michael Mauboussin and is explained in detail in a Credit Suisse research note. Mabusson uses the example of Ted Williams, who was the
Mabusson.
last player in Major League Baseball to hit over 400 for a full season in 1941. Baseball players have gotten better over time, not to mention the use of performance-enhancing drugs.
Yep.
So why hasn't anyone been able to match Williams? The answer lies in the two dimensions of skill. Skill can be viewed as
This sounds
absolute
interesting.
and relative.
Okay.
In absolute terms, today's
Okay.
athletes are more skilled than athletes of the past.
Okay.
They are better trained, better coached, have superior
Nutrition.
nutrition, and come from a larger talent pool.
Uh-huh.
If one of today's best baseball players went back in time to 1941, they would likely have an easy
Murk
time
everyone.
matching or surpassing Ted Williams. But today's athletes don't get to travel back in time. Their higher absolute level of skill is not an advantage because their relative level of skill is, as evidenced by nobody matching Ted Williams, lower. In a competitive scenario, like baseball or stock trading, everyone is competing to find an edge. As absolute skill increases for all participants, relative skill is decreasing. Finding that edge is getting harder because everyone is getting better. If two equally skilled traders are competing for an edge, the outcome will be determined by luck. And as the skill of all traders increases, the role of luck in trading outcomes also increases. All right, I know I've painted a bleak picture for the prospect of day traders, and rightly so, because the reality is just as bleak.
It's the truth.
So why do day traders still day trade? A 2019 paper
Because
in the
they're
Review of
addicted.
Asset Pricing Studies titled Learning Fast or Slow suggests three possible explanations. First, day traders may not have standard risk-averse preferences. In other words, they seek investments with a highly skewed outcome, like lotteries. If this is the preference that day traders are exhibiting, the authors suggest that simply buying and holding a single volatile stock would be a better solution than day trading. Second, day traders may be overconfident in their prior beliefs about their own abilities and be biased in the way that they learn.
Damn, hold on. So I personally feel like I'm learning so much, hence to why I'm even quiet. Because normally I'm not this quiet, but I'm just soaking it all in. Like it's quite, it's interesting, man. Damn, it's actually really, really interesting. Thank
While
you,
novice
Ben
day traders
Felix.
likely realize that most day traders do lose money, the stories of successful day traders may circulate in non-representative proportions, giving the impression that success is more frequent than it actually
Then
is.
it's easy. Yes, that's very true. And it doesn't help with all of these gurus. That rhymed, by the way. That's very true. It doesn't help with all of these gurus lying to you and not giving you the correct message so they can give you their false templates. But yes, honestly speaking, though, it actually, they make it seem a lot more easier than it is. Like, oh, I just made $1,000. It's like, okay, you're probably not gonna do that if you tried it. So, yeah.
Third, day traders may day trade for non-financial reasons like entertainment, a taste for gambling, or the desire to impress others. They may enjoy the process of day trading so much that regular and expected losses are simply the cost of admission to an enjoyable activity. There's
Wow,
one
true.
final point that any day trader, or stock picker for that matter, should consider. Which stocks are you looking at and why? It's not as obvious as it seems. A 2007 paper in the Review of Financial Studies titled All That Glitters, the Effect of Attention and News on the Buying Behavior of Individual and Institutional Investors attempted to answer the question. The authors found that individual investors are net buyers of stocks with high trading volume, net buyers of stocks with extremely negative and extremely positive one-day returns, and net buyers of stocks that appear in the news.
Okay.
Limiting their opportunity set to attention-grabbing stocks poses a problem for individual investors. The attention-attracting qualities of a stock may detract from their attractiveness as an investment.
Wow.
The authors offer the example of a well-circulated article about a deserted vacation spot attracting the attention and the travel plans of many vacationers who would all be disappointed by the crowds of like-minded tourists when they got there. Similarly, attention-based stock purchases could temporarily inflate a stock's price, leading to disappointing subsequent returns.
Fair enough.
And even beyond that, there is a massive skew in individual stock returns. Only 1.3% of global stocks were responsible for all of the net wealth creation in excess of treasury bills from 1990 through 2018. There are thousands of stocks that trade across the world. But the evidence suggests that individual investors focus on the ones that grab their attention as opposed to examining the full opportunity set. It is clear that day trading is not a profitable activity for most people. And
do you hear that? It is clear. It is clear. I'm not saying if you do it, you're going to lose money, but I'm probably saying that if you did it, you would most likely lose money. Get the difference? Yeah.
The fact that a tiny fraction of day traders exhibit skill in some samples should not be enough to entice rational investors to gamble. But the behavior of day traders suggests that gambling may be exactly what they want. If day trading stocks is the biggest casino in the world, like other casinos, it is a losing game. Since there is no evidence of learning among day traders, paying someone to teach you how to day trade is only making your prospects worse after costs.
Yeah.
Finally, individual investors tend to focus on attention-grabbing stocks instead of rationally assessing the full global opportunity set. This alone dramatically increases the likelihood of trailing the market. Thanks for watching. My name is Ben Felix, and this is Common Sense Investing. If you enjoyed this video, please share it with someone who you think could benefit from the information.
Share it, subscribe, like, do all of that amazing stuff right there. Now, that was a video and a half. Some of you guys may have found it boring. Some of you guys may have found it interesting. If you're young, you might find it like, you might find it like, oh, mate, like, but if you seriously want to, basically you want to get on top of your finance, you want to understand things, you want to see, okay, what do I want to go into, what do I not want to go into? In order for you to be able to differentiate what you want to do and what you don't want to do, you need to seek knowledge and information. Hence to why we plan on delivering that on this channel. Ben Felix, that was an absolutely an amazing video. Packed, I repeat, packed full of so much information. So, yeah, it was actually, I was just quiet, just watching, like, and just learning. Like, this guy was just spilling out too much knowledge. So thank you ever so much for this video. And if you guys enjoyed it as well, make sure to do everything I said, subscribe and do all of that great stuff. But my personal opinion, to close this off as a summary, is I am not a fan. I feel like, for me personally, I feel like it's just professional gambling. Too many people lose their money, and for you to even have some knowledge, you can learn on the internet, but obviously, but you can get easily sucked into the whole guru stuff, like, oh, I promise you it's gonna work, like all you have to do is pay me £2,000, £3,000 and I'll teach you everything I know. Here's the proof, here's my bank statement. All of that is very dangerous in the sense that it can draw you in, and you're like, what if it does work? You know what if I take the risk and then I become a millionaire? Do you get what I mean? And then you lose out on everything, and you could have just simply chucked all of that money in S&P 500, Vanguard, and made a better return basically on your money. Literally be positive, like ROI. So yeah, that's my personal opinion. If you want to be a professional gambler, by all means, go for it. When you lose money, don't blame me, because I kept it 100 with you guys. Once more, this is not professional advice. It's just me, opinion, blah, 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 all of that amazing stuff. I hope I'm covered. Am I covered, Susie? Yeah? Yeah? Okay. It's not professional advice. It's just my opinion. If you want to gamble and potentially lose your money, by all means, go for it. I personally don't encourage it. So, yeah. Okay, cool. By watching this video, you did not waste your time. Don't forget to tell your haters to get in line. Yes, my friend, I will catch you guys on the next video. Be sure to check out this video right here, this video right here. Click that subscribe button that you see right there and join the family. If it's possible for one, then it's possible for all, like I always said. Okay, if you watch the video all the way to the end, at this very point, I want you to comment: day trading is a no-no. Day trading is a no-no. Day trading is a no-no. Comment down in the comment section and it'll let me know that you watched all the way to the end. So at least I can give you credit and reply to your comment for you watching all the way to the end. Thank you ever so much, and I'll catch you guys on the next one. Peace out, much love, bye-bye.